All right. Good morning, everyone. Happy Monday to everyone. Hope everybody had a restful weekend. We're coming into the final two sessions of June, end of quarter, end of month, and we're heading into the 250th birthday of the United States. Woohoo! All right. Lots going on this week. It is a shortened week. Friday, we are observing the 4th of July on Friday, so markets are closed on Friday, so it's a short week there. Yes, happy birthday, America. So let's see what we can get accomplished today and for the next couple days. Probably going to have some window dressing. Essentially, the end of the quarter is complete for the institutional players. If you were around on Friday afternoon, late into the close, you saw that massive move in price the last seconds of the session. It was just absolutely like, this is crazy, right? Yeah, that swan dive and then rip right back. It's just stupid, but that's what we have. But it was in the quarter play. Remember, it's trade date plus two, so 2 days of settlement. So that brings us into today and then tomorrow settlement. All right, so that's why on Friday there was quite a bit of hoopla at the end of the day. So for the next couple days here, again, kind of there's no, I didn't see anything significant on the calendar today for economics. So pretty much like the market's free to move about the cabin kind of idea, right? All right, so let's get going here. Monday, June 29th, 2026, and this is the audio addition to the Daily Trade Strategy Brief. NFA Compliance Rule 2-29C. You're all familiar with the disclaimers associated with trading. Trade with money you can afford to lose, and past performance not necessarily indicative of future results. All right. So today, actually, if you've been taking a look at all the Sunday night Globex openings, okay, I can't remember a Globex opening that has just been a pure outright sell. It's always dip down, buy the dip, hold on for the bounce. Last night, market opened, but it opened firm because again, kind of this review at the end of the day on Friday, the military announced after the market closed, interestingly enough, timing wise, that they conducted strikes on various targets over there in Iran. So perhaps not to rattle the markets at the end of the day on Friday, they chose after the close. So if you don't think this stuff is manipulated, well, that's pure example, unadulterated example of what they do. They don't want to rattle the markets last thing on a Friday. And then over the weekend, I guess yesterday, POTUS announces that, oh, okay, the talks are back on and the ceasefire is back on. All right. So, I guess they've agreed not to throw Molotov cocktails at each other. I don't know. I think this is the way it's just going to be during the negotiation process. And, so, we'll just kind of deal with it. But it's just interesting the timing. That's all. But in any event, I did write the daily trade strategy heading into the late yesterday afternoon, like around 4 to 5 o'clock before the market opened. And then I was actually around for the market opening last night in Globex. And I don't know, you should all be able to see my postings from last night, Sunday night. So I was posting and I was talking to a few people in real time. So you can kind of review my posts in real time. But anyways, market opened up pretty darn firm, right? Above the prior close. Prior close is at 97. Opened up. Our line in the sand was 74.10, right? And that just held, and then it came back, tested above the 20s, and then just kind of ground up. Hit all targets that I had up through, anyways, to the 75 area. I do have additional targets up between 85s and 95s. But as you can see here on the chart, on the left chart, prices did overnight or early this morning actually hit the D level. Surprise, surprise, surprise. So if anybody was around and played that, I was not here to play that. But anyways, that did have some sort of response for it if you were able to play it out early this morning. If not, no biggie, right? But basically, the market's still in this pretty wide kind of range action, right? So it is a cycle day 2 today. And if you can see here, let me just kind of expand the chart out a little bit more. Okay, so we have kind of this was from last week, the drop here, right? An automatic response, back up, okay? And we talked about this. They tried to push it up, okay? And this was, you know, our kind of classic PKB style trade, look above, fail, reverse, okay? And then when they broke, again, this is into the various sessions, not all on one session. And then kind of what you see here, a lot of times you'll see a symmetry. All right, similarity or likeness in swing. Pay attention to stuff like that, right? Look at, you know, particularly the impulsive moves, right? So that was an impulsive move down here. Then you get your automatic reaction, consolidation. Then you got another impulsive move, right? These are pretty darn similar in not only in magnitude, but in time and price, right? So pretty interesting. Then of course we got, you know, more sideways kind of chop, and that's what we were experiencing throughout the week last week. But aside from the, you know, the overall kind of choppy, you know, rhythms of that, you want to pay attention, and I've talked about this in the past. You want to pay attention to value. All right, these are the gray zones. It could be a different color on your charts, right? But you want to pay attention to value. Again, remember that 70% or 68.2, I believe. But I just go round it to 70. I think everybody rounds it to 70% of all the activity, right? So when we look at high, low, right, and midpoint, okay, we typically will reference high and low of the session and then the midpoint of the day, right? That's typically what we do. Well, you can do the exact same thing, right, with value, right? High value, low value, right? Mid value works the same way. That's more key because price can exceed value, the edges, right? But it's again, how much time does it spend there before returning back? Like you can see this one as an example, right? You know, market was pretty much trading within the context of value in these 2 days. We get a pop above that. And yes, there was some volume up there, but then it didn't stay up there and then it reversed back down. So one of the kind of the key components of a directional move, when we talk about trends, right? Yes, we want to make sure, you know, high lows and stuff, but one of the more key components when you're looking at trend or range is what's the value zone doing, right? So value. So pay attention to that. I know it's not something that's on our radar, you know, I guess right at the, you know, in terms of hierarchy, what we think about, what we're looking for. But when we look at the bigger picture, I'm always asking the question, okay, what is value doing? What has value been doing? Okay, how has it been migrating? Is it overlapping? Is it, kind of a trendy down, trendy up kind of pattern, right? So you can see here, right? You can see somewhat like when you connect the highs and lows here of value. So we've had kind of this downward kind of drift, all right? And again, this is just more for broader analysis, all right? Trying to kind of catch. Remember, what we're doing is we're tracking and we're following the footprints of who? The big folks, right? Big institutions and so forth. So again, value is a key component of looking at what the market has been doing. And then it gives us some context as to, when prices reach certain levels. So here coming in today, okay, yep, we got a gap, we got to move up and move up, move up, move up, and look where it's kind of, look at this is the 5 day, all right, composite, all right, value, right? So look at the 5 day. So right up into the upper edge of 5 day value. That's the all these days combined, right? So upper the, so again, 75s was a target of mine that I again posted last evening. All right, up there near the 75s. So again, I was, in terms of my targets, I was putting some progressive targets, kind of 10 handle targets, 55, 65, 75, etc. But basically, that's what, it's not that I'm just using 10 handle targets, but rather I'm looking at how the market's been responding and where it's, responded, stopped, consolidated, traded a bit, and then moved, right? And it's kind of in these 10 handle increments. So, just kind of going with, just trying to outline what the general rhythms are. All right. So that's something to pay attention to. Again, just from a broader perspective. All right. We want to obviously, be aligned, kind of with the overall, but it can help give us some context. So today now is a cycle two, right? CD2. And normally, right, what would be anticipated on a CD2, right? Some backing and filling. Right? So that's what we are anticipating here. 7.5. Right? Hold on. One second. So let me just move this around. Uh, Jesus. All right. So we'll see how this ultimately plays out. Again, right now, obviously, bias coming in today is obviously favors longs, but again, overnight move, we could get an early retracement back down. If we do, we're kind of looking at around the A10-ish area, VWAP, okay, area at that point to play, right? And let's see how this unfolds for us today. Take it slow and steady. Slow and steady wins the race, right? All right, and let me know if you have any questions, comments. I'm gonna try to stay focused as I can here today. We got a lot to be looking at here, so that is what we're looking at in terms of levels. Let's see if the market is good to us today. Okay, that didn't work properly. What? Oh, fuck. I hate Ninja Trader. Yeah, it doesn't matter. Fucking A. All right, sorry about the French. Motherfucker. All right, hold on a second, guys. I got something I got to deal with. Sorry about that. All right, in any event, let me, I'll deal with an issue that I have ongoing here. But the A10 there worked out, as you can see. Hopefully, I got everybody focused in on that. I had an auto X on the Ninja Trader, and it misfired. Not what I wanted it to do. Sorry about that. Sorry about the interruption. Sorry about my French, guys. You don't know, and when I have the mic off and things go awry. God. All right. So, anyways, we got the long, we got the long on the A10. I hope you guys caught that. Ninja Trader can have that effect on people. You know, yeah. Holy moly. Anyways, sorry about that. All right, we got trailer on the A10 long. All right, again, that was a quick. The that was such a beauteous play. And what happened to me was I had uh, my Auto X on the A10. Okay, it touched it and then triggered me in and triggered me out immediately. And the settings are fine. So, like, what happened? So that just essentially cost me, I don't even want to tell you. Oh, and by the way, that's a Pro Plus account. So you can see that it's a that it's a painful non-execution. It cost me coinage. Yes. I got an eval done, or at least partial, right? Here's an eval. That's on Sierra chart, by the way. So there's your eval, okay? And I exceeded the 4,500 by 180 bucks or something. So I got the eval done, but the Pro Plus misfired, and I have to use Ninja Trader. I hate Ninja Trader. Anyways, all right. Just letting everybody know what happened. So you think it's easy? You know, you guys have issues. I have same issues too. You know. Uh, anyways, unbelievable. Um, Oris asks, is there any benefit to using trailing evaluation instead of end of day? I would select, if you have a selection of choice, I would use end of day. What is the deal with Sierra warning about rhythmic data? It just says it basically the warning on rhythmic data is it doesn't it, it's not inherently supported. Okay, that's really what it comes down to, Steve. That Sierra chart's not inherently supporting it. So don't worry. I wouldn't worry about that. If you're using Sierra with rhythmic, it works perfectly fine. No, it's not a prescription for disaster. I've been using rhythmic with Sierra chart for I don't know, a few years now. Not really any issues. Okay, let me regroup here mentally. That was first thing on a Monday, you know. All right, well the eval is done for today, anyways. Let me focus on my other stuff. All right, so we're still long on the 810 again on our screens up here, and we were looking for longs again, outlining that before that pulled back. So hopefully you grabbed a piece of that. You just set the opening range things here. Oh yeah, you know what? Yeah. All right. All righty then. So we're back. We're back with you here. Sorry about all that disruption early. I'm so sorry I had the outburst there. But I'm human too. All right. So staying to the long side. Yeah, I'm just a human like everybody else, not a robot, and I'm affected by it as well. All right. Back to business here. All right. So we'll just stay to the long side again. We'll look for dips. Right now, again, I got a trail on the 810. Again, that's up. That's for the screen for everybody. So just for demo purposes there. Yeah, it's not really a big deal. All right. Thanks, Jerome. Yeah. All right. Did that scare everybody? My outburst? Wait a minute, that's not like David to do that. That was an outburst. That came out of the blue. All right. Okay. So we're just leaning to the longs. All right. Not much more to do except for that. All right. Still working the A10 long with trailing stop. Yes, this was an extreme here on this dip. I did not get it, as of course I'm a little bit distracted there for a moment, so I did not get it. But good read on that, Ram. Yes, that is a discount extreme. What Ram's pointing out is this star over here. Okay, it's in an up move, so that is a valid trade to have taken or considered. 85s is another target of mine that I posted last night. So 75s, 85s, and then my final target that I posted last night is 95. So I'm not sure whether we'll get there, but we got the 85s. All right, so this is what I posted last night at 7:45 Sunday evening in the room here. I don't think anybody was here. I was talking to a couple folks over at the Mr. Top Step, so they were trading. But again, I posted that last night. 3-day rally target hit. Yes, very good, very nice. All right, over here on the left, cycle day 2, 3-day rally target 88. Got tagged beautifully. And again, you got money box 1. So money box 1 for some of you is a short. Could be a target, but it also can be a short. So just be patient for setups now. Let the market kind of settle into its rhythm in terms of price range, etc. All right, so nice rejection off of the money box one, MB1. All right, again, MB1 over here, right? Again, the D level, and you got 3 day central pivot, 3 day rally. Okay, so all those areas are valid, right, for either take profit or an entry short, according to our playbooks. Not everybody is trading the exact same playbook at the exact same time, mind you. All right, so just keep that in mind. But we all have, again, you got to directly to your own personal plan with everything. All right, we scaled out of the A10. We're back to VWAP, kind of resetting that move back to prior high. All right, so back to VWAP here. Let's see where the market settles in. Again, the early pop up there really played out beautifully on the reversal off the 3-day off the 3-day target, which is at 74.88. Money box zone, right? Back down to prior high, and now back down to the Whopper. So that move now appears to be exhausted. Right, so now the market needs to settle in on whatever range it wants to, whether it's gonna a jam and slam, or jam back down and then kind of consolidate. So that'll be anticipated action here around VWAP anyways. Right, looking to just kind of settle in around here. All right, A4 here on the shorts playing out. So if you grab that first pullback, A short. If not, that's fine too. Let the market settle in. Oh, that just hurt everybody. I'm looking at it over here on the other screen. I just hurt. Oris asks, seeing how price is below both 810 A4 and VWAP plus 8 cycle day 2, can we anticipate a test of the lower DLMB? That's certainly a scenario, Oris, down here. I mean, we got quite a distance to go, but it's not certainly if it wants to be a range runner type day, sure. I mean that's obviously it's untouched, so that's certainly a potential. All right. I cannot make an inference that that's more likely the case at this stage, but certainly can be. You know, take it one step at a time, basically, right? So with the shift here, okay. So what's the lean at the moment, right? The lean now is to the sell side, right? On that pop and shift back down, the pretty hard rejection off of that. I mean, that's a long tail rejection up there against the 3-day cycle target, money box, and now here we are, right? So that was a strong rejection. So we'll lean to the short side now. So strong. I'm going to post this stuff for the recap. All right, so just some of the notes here. Strong price rejection once the 3-day target 88 and the money box level 1 were fulfilled. Now the current leads favors selling bounces and could possibly be, turn out to be a range runner type day. Uh, don't know for sure till after the fact, but again, with this volatility, who knows, right? So not trying to pick a level, to go against the move, rather just stay in alignment with the current move. So right now that's leaning to the sell side. All right. Ooh, quite the reversal. All right, we're trailing on the A4 here. All right, so A4 short here, trailing. I don't know, Orist. Maybe you're going to be right on that. That assumption. You get a range run to go all the way back down. Never know. Crazy. Well, you can see how fragile and brittle, right? The market actually is, right? I mean, you got all those, all that buying overnight, right? And again, what they do, pump it up and then just to slam it. Where are all the buyers? Where have all the buyers gone? You got a whole bunch of Supreme Court decisions coming out today, not very favorable for the Trump administration, looks like. I don't think that has any effect on the market here, just saying. So Oris asks, do you define long wick as that portion of the tail from the high to the maximum of open or close? In other words, a long tail is not based on the color. But no, it's not based on a color. It's just based upon essentially uh, my kind of rule of thumb is, let me just draw it out. Okay, my kind of rule of thumb is, so here's the body of the candle, right? So let's just say it has a small wick to the downside, right? And it has a long wick to the upside, okay? So for me, kind of defining what a long tail or a long wick would be is approximately 50% or greater, okay, of the range of the body of the candle, right? So that's gonna show, hard rejection. So they pushed it up and then they rejected it, back down, right? So I'm kind of looking roughly around 50% or greater, right? Even better if it's, like a smaller body type of thing. Okay, does that make sense? It's not the color. I mean, typically you'll get, you can get actually a long cell tail and still have, in terms of the color, that's just where it closes, right, versus the open. But you could actually have a long tail on a bullish candle, right? So like over here on the left, right, you see it right here, this long tail right there. Let me see if I can, there's a green candle right there. So actually the candle closed green, right, above the opening, but it actually had a long tail. So it's still read the same way, but generally what you'll find is you'll get like, a lot, like here's a good bar right there, right? So you have a long tail, right? You get a small body and then a little, right? So that's really a good long tail. Again, it's just not so much the color, but what is the implication of that? What's happening in the bar? What's happening in price in that period? That's how I define it, right? So if the long tail is the upper wick is 50% or greater of the body of the candle, and short tail, right, lower tail wick 50% or greater of the body. That's how I define it. Yeah, oh yeah, they could definitely have a long tail on both sides for sure. And that would be, considered a doji, right? Oh, okay. Hold on a second. Okay, you don't see the opening. Okay, I got you. Sorry about that. Let me take a look. Main room. Okay, so you're missing the main room. All right, let me get that back. There you go. Should have the main room now back. All right. All right. So we scaled out of the A4. Okay, nice little trade there on the short of the A4. We ended up getting an A10 short on that, but that briskly stopped out. But that's fine because we had a good run on the. Here's the A10 trades. All right, so we had a good run on the first trade, and we got stopped out on the second trade. So, but the first trade covered the stop out of the second trade, so that's good. And we have a couple good trades on the A4, long short, so that's good. So overall, not too shabby. But good range. I mean, like I said, potential for kind of a range runner rhythm day. Price just gets too far extended, right, one side, and then kind of whips you back on the other. Yeah, I mean, look at these. I mean, this is a 60-minute chart though, but look at these monster long tails. I mean, that's just telling you that you know there's not really a good agreement in price. I mean, it gets again, uh, it gets an excess, right? Those are also referred to as excess bars, right? So it gets an excess, reversed, excess, reversed. Not the easiest type of rhythm to trade, everyone. Don't think that it is. But again, you just got to need to recognize it. And on these type of range runner style days, okay, again, these first pullbacks to the A4s can play out pretty aggressively. So again, something to keep, kind of just keep under your hat on how you want to proceed. John B says the bigger picture is still inside this balance zone from last week. Could get choppy, yeah. So look at it. Look at it this, right? I mean, here's the 5-day balance zone on the right. Okay, look at that. Price rotating right back down to lower balance, right? In this morning, it exceeded, right? It exceeded the upper value, but again, aggressively reversed. All right. So this is why I was talking about, when we referencing the value zone, it's not just a nice little term. This is where the market sees where there's value. So when price pushes down to a lower edge of value, kind of think about this as discount, right? In terms that we use, right? So lower value, you can think about this as discount, right? Below this is, deep, right? Discount. They also refer to this as unfair, okay? And then up here, where the upper value is, right? Consider this as premium, right? And then above that is unfair, okay? Or another way you want to maybe think about this in terms that we use, right? Premium, right? Extreme, right? Discount, extreme, right? Below the value highs and lows, right? And then in the middle here, this is fair value. This is fair. All right. So kind of within, rotation within this area is fair. So if you want to use kind of those terms that we're familiar with in terms of kind of thinking about what a discount or a premium is, right? When considering, the value zone. So what happens down here, right? Price pushes higher. Remember, price can push above value or below value. It's whether or not it stays there for any length of time. That's kind of the key, right? Price is easy to push around, particularly when it's outside of value. It's very easy to push, right? And so when price gets to that kind of this unfair value, unfair kind of pricing, right, as it did this morning, sellers come in. Hey, I want to sell at premium price. Think about it. I want to sell that premium price. That makes sense to everybody using those terms, right? So then they sell them, and then of course, lots of people get wrong-footed, and then of course they move it down, and now we're back to a more discounted price, right? Okay, I'll buy those, and then you get this move back up. So maybe use terms discount, instead of value high or value low. I mean, that's technically what they are in terms of profile language, but convert that language into something that you're familiar with in terms of our terms, right? A value high area is a premium. And now we're talking, as John mentioned, um, still inside the balance, right? Or the fair value zone from last week. So again, that's the 5-day value. So we're still inside that. I think if you do think in terms of, again, outlining this as, yeah, value low or discount, right? Value high or premium, and then above those is unfair or extreme, right? Down below here is unfair or extreme. So particularly if we're in like, a cycle day 2, typically we're looking for a range type trade. So identifying what those edges are, in this case coming in on a Monday, we really got to have to reference last week. So then the idea is what does this become if price goes above the value high or premium high, right? What type of trade, right, that we would be looking for? A PKB, right? A reversal, a look above and fail. Same thing down below here, right? We're looking for some sort of, PKB, look below and fail and reverse. Didn't quite get to that point, but those are the style trades that we'd be, potentially looking for at these upper and lower edges, right? So then when you're doing all that, then what you're doing here, well, how do I integrate that with the execution charts? Well, this is how you integrate it with the execution chart. So let's just take this move down, right, into discount land, right? And then the price starts moving higher. So we're down here in discount land, right? Right, so value area low. Everybody tracking with me? So how do we trade that, right? So we wait for a shift, right? And then in this case, we could take the first pullback following the shift against, in this case, and again, maybe every case is going to be perhaps different, but in this particular case, right, using the 5-day value high, value low as a discount premium zone. And the question becomes, the big question mark, what would we be expecting from the marketplace? Not from necessarily what, we don't have the power, but we can certainly observe what's happening and kind of take our cues from what the market is giving us. But what would we anticipate? That's what, this is the thing about, you can see it all after the fact, can't you? 2020, boy, it's crystal clear after the fact, isn't it? Especially perhaps as I explain it. But what we want to do is we want to take that explanation, that clarity, log it in, make a note about it, because at some point in the future, we are going to see this again. So what we're trying to do is learn from what has happened, notes about it, right? Get some clarity about it to what has happened, because I have high confidence we're going to see it again. So I need to be prepared for the next time, and then the next time, and the next time, and so forth, right? But if we're always behind, and yes, we all need to learn, and we may not have thought about this in advance, but that's the idea about learning from what has happened, making notes about it. If you're not making notes about it, or if you're not taking snapshots of screens, what I'm putting down on the screen, right? What, again, my suggestion for everybody is, as I'm drawing these things out, you guys should be taking snapshots of this, right? And if you don't have like a Snagit, you know, I use Snagit, right, from TechSmith. So if you don't have a screen capture program, I highly recommend you get one, right? So as I'm drawing these things, take a snapshot of it, and then you start making notes about it for yourself. You can actually, once you take a snapshot of one of my screens on Snagit, you can put text notes on it. Again, when you're in real time, right, and I'm explaining this, if you do that, it's fresh in your head. Once you've saved it to a folder, then you go back later on and then you kind of break it down slowly. You go back to the chart, you see what I posted, you start thinking about it, kind of reliving it in your head step by step, and that's where you begin to retain. What I used to do when I was in college, I know we're going way back now, but it's really helped me even throughout my life. So I'm in class, right? And I am paying attention in class. Now, this was before recording classes and everything. I had to, you had to take notes, right, in class. Not like today, much different, right? But same idea. So I'm in class and I'm taking notes on my notebook. Now I'm doing a lot of fast scratching, trying to take as best notes as I possibly can, right? Listening to what he's saying, writing things down, sometimes verbatim, sometimes not, maybe shorthand, whatever. So I write all that stuff down. When I go to back to study it, okay, what I do is I rewrite my notes from what I jotted down. So maybe I'm going through a section of the book, textbook. I'm recalling what happened in the class. I'm reading my notes. I'm rewriting my notes in a more clear fashion. So this is kind of what I'm suggesting to everybody here, right? Is I'm writing these things and drawing these pictures and whatever, notes on the screen. Take a quick snapshot of them and then go back and, redo it. Okay. I think it'll be, I know it's tedious. You want to learn, you want to, you know, move forward. You got to do the tedious stuff. All right. So that's something that you may want to kind of think about. All right. So again, a discount in this case, value low. How do we trade it? Am I just buying, buying it on the way down like that? Right? Or is there some may do that, and again I won't argue with that for anybody. Or you do something where it's in that area and then you wait for, a shift and a first pullback. Yeah, actually, Nicholas, by the way, Nicholas does that, right? So I started reading. Nicholas sent me a piece that he's working on, right? And I started reading it over the weekend. Nicholas, thank you, by the way. All right. Um, and essentially he's kind of writing out scenarios. And I do think it's a game changer. I think it can, again, be very, very useful. All right. Good morning, Barbara. All right. So, anyways, that's kind of, take that to if it helps you at all. All right. Just kind of hanging around the VWAP right now. So, same thing if you want to kind of, pick around the levels here. Where will I post today's session? I do a recap, Barbara, and it's in the trade plan section on the website. All right, so let me pull that in. So if you go on the website, you go into the trade plan section. Okay, so here's the daily trade strategy, and then there's a trading room recap. Okay, Fridays trading room recap. Trading room recap. Okay, so then when I do a recap, basically, the recap is I try to write as many notes as I can in the chat here, my thoughts and comments, because then what it does is it picks it up. All right, so I use the AI, all right, to pick it up, and then it helps write it, and it kind of gives me a nice little recap picture about what happened. All right, so it's in the trade plan section. All right, so we're in a high volume area here. Okay, so high volume, okay, is synonymous with acceptance, right? So high volume, right, equals acceptance. All right, so with this block of high volume in here, okay, again, trade down, trade up, trade down, trade up, back and forth. So again, acceptance, right? So what we're not looking for, well, let me just say what we're looking for. So what we are looking for, right, in this area of high volume is we're looking for price to kind of rotate around, but we're looking for it to stay in that area. All right, that's kind of the initial assumption. Because it's high volume area, that means both sides, buyers and sellers, agree for the most part at those various price points that they accept this area as what? As value, okay, or as fair price. Does that make sense to everybody? Right? So if you're looking at that in terms of a volume and the understanding of acceptance and fair value, to this point, could change later on, but to the information that we have currently, when we're looking for price to move around, so if it kind of moves down here to the lower area of the volume, what am I looking for? I'm looking for buyers to step in, right? Kind of similar to that discount, right? Premium type viewpoint. That's why I have profiles up on the right. I don't teach profiles. I will teach the idea of using them from a standpoint of, you know, from a standpoint of using them as just understanding the concept of fair value versus, you know, acceptance, rejection, those type of things. Okay, and for me, you know, a lot of profile traders have specific trade strategies with it. Um, I don't, but I do use it. And so if price comes down, so here's another, so here would be something to think about. Again, I'm trying to throw you ideas. I'm not trying to give you trades. I'm trying to give you ideas to think about so you can develop trades for yourself, right? With all the tools and things that we have. But if we're talking about value in this area, high cluster of volume, that's all I'm talking about, high cluster of volume. And what else do we have? We have VWAP, volume weighted average price. Price comes down below VWAP, okay? What could be a play? Remember, I'm trying to get you to think in advance. So observation, orientation, then decision action, if there is a decision action for you, right? In the observation orientation. You're not going to get to the observation, you're not going to get to the decision action unless you've done you know, decent enough observation and orientation. If you don't know where you are or have any sense of kind of how to outline it, you're not going to be able to take a good trade, right? So the idea here would become, okay, we got high volume, right, area. So that's acceptance in that vicinity, right? We got price rotates down below VWAP. So VWAP is a reference, all right, REF, it's a reference. It's below VWAP. So how could you frame out a trade, right? If price, right, is greater than, right, VWAP, or you can think about it as in reclaiming it, RC for reclaim. Well, not just return to VWAP, yes, but return to VWAP, but reclaim it, right? Right, back above, right, above. So that could equal a buy. Again, I'm just trying to write some shorthand, right? Write whatever shorthand you want. So if price um, uh, is greater than VWAP, so it's below VWAP, right? If it gets back above, so it reclaims RC, gets back above, all right? That could be a buy, right? Because you're in the lower part of the value area, the big volume cluster. And again, if we understand that what that means is that it's an area or a zone of acceptance, not just one price, but a zone of acceptance. So when price kind of pushes down below VWAP, right? I'm going to make an assumption that the VWAP price can get back above VWAP. Now I don't know how far it may go, but that's an assumption, right? And so then I would be planning, well, if that happens, this is why I want you to guys think about writing out in some sort of shorthand for yourself what that, you know, what you can formulate. it's going to help you think. If you do it by hand, it's going to help you think faster without doing it by hand eventually. But if you write it out by hand in kind of a shorthand mode like that, you don't have to, write out longhand, just like if P, meaning price, greater than, right? V for VWAP, RC in this case I use for reclaim. What would that mean? You know? Or maybe you need to, then what? If then, right? Again, if you write it longhand or you write some sort of a shorthand, you know, contraction, you're going to eventually be able to do it in your head without writing it out. But you're not going to be able to do it in your head without writing it out. I would bet dimes and donuts on that. Try doing it in your head without writing it out first, longhand, because you're not going to remember how to do it. So that, again, another little way of doing that. And that keeps you in the moment, keeps you saying, well, hey, we're at the, below value, VWAP rather, right? And then to what Orest was saying before last week, right? So we're coming down here, we get all this red bid-ask volume ratio, right? Right? So again, kind of don't let that confuse you. Remember, these are all secondary instruments or secondary indicators. We were talking about instrument panels, right, last week. So this is all secondary. This is all primary. So the primary is, and again, kind of thinking about it in advance. Well, if this, then that. And then I'm looking for support. If this starts moving up and reclaiming the VWAP, what am I looking for? Well, what would I want to see as a trend of buyers? I'd want to see that trend begin to support that price move. All right. So those are the things that you want to kind of continue to push towards, right? It's not trying to predict what the next move is, but reading, what has happened. Now again, now take a look here. We got value high, right? Or premium. Look what happens. Price comes up where? To value high or premium. What do you expect? What would you expect to potentially be a scenario here? A move back down. Is this ringing any bells? Is this kind of making any impression? Just trying to give you some alternate ways of viewing this stuff. All this stuff that we have on the screen, okay, certainly is valuable, but we still need to know how to use it. If you don't know how to use it, you don't know interpretation of any of this stuff, then it's useless to you. And then if you're up at the upper value area or the premium area of volume, right? Then you're looking up here and you're saying, okay, are there any peaks? Is there any premiums on the CCI? Maybe you put a short. Again, you're kind of formulating a trade that you know, if price, is at premium, et cetera, et cetera, et cetera. You kind of write out something, right? And say, what are you looking for? Maybe I'm looking for a reversion back to the middle. Why? Because we're in kind of this range type of activity. So I'm kind of looking for a reversion back. So if it's up here, right, and we're kind of, peaking on the oscillators, then maybe put a sell stop, right? So when it reverses back down, you get pulled in, and then you get a stop loss up here. Again, I'm just trying to throw out some ideas, right? Not that you should have done any of that. I'm just throwing. These are things that kind of the thinking about. But what happens if it doesn't work? And you know what I'll say to that, right? But if the idea is sound, right, and you're putting together kind of, you're connecting the dots a bit, all right, it'll eventually start coming together little by little. So Oris asks, so just above the bid-ask volume ratio, secondary indicator, but below the primary leading price is a histogram of uh, two red lines and green, pointing out. What does that mean again? Okay, so good question, right? So these, right, these signals here, okay, is called cycle trend, okay? And they look fabulous, right? Wow, that caught the high. Wow, that caught the low. Wow, that caught the high. Okay, yes, they do, but there's caveats to it. Okay, all right. This oscillator here is based on a sine wave. Okay, and if you understand what various sine waves, you have a slow sine wave, and then you have faster sine waves. Okay, if anybody's familiar with sine waves, frequency sine waves, right? So you get these, and what this basically does is it identifies peaks and troughs of a sine. Okay, yeah, Fourier series. All right. So you want to, it's all explained on the website. We have actually a video on it. We have a video for that. Let me cycle trend. All right, I'll give you the link here. I'll give everybody a link. I'll give you guys the link here too. All right, so there's the link to the cycle trend. There's a video on that that explains it. All right, but that's essentially kind of what it is. Now, what you don't want to do with it is you don't want to use it in isolation, because what will happen, and this is what everybody kind of freaks out about when it comes to the cycle trend, is let's just say uh, this is starting to paint down below here, right? So you're starting to see it, turn green, right? This will be green down here. So it starts turning green down here, and you're thinking, oh wow, this is gonna be the low, and we're gonna go, up to the next, right? It may, but it's not locked in yet. So these are locked in now, right? These are locked. Okay, so you can see, all right, the high, the low, that swing down there. Okay, so these are locked in. So right now we're on a swing down, but this could certainly stop and move higher, right? It's going to do whatever it wants. The idea of what the sine wave is doing, right? It's going back and forth, back and forth. There's a slow sine wave, and then there's a faster sine wave, right? So what it's trying to do is capture when both are kind of like this, right? So you get the faster one and you get the slower one, but it's not enough yet there, right? That's just partial because sine waves are can be slow. Of course, you have the faster frequency, but they can be that doesn't necessarily lock into place. Price also needs to get past a pivot. It needs to still pivot, right? So it needs to lock in a certain number of bars, and then it'll lock into place, right? But if it doesn't lock into place, and if it doesn't stay below, in this case, doesn't stay below the high, right? And the price kind of rotates back above the high, that thing will, we refer to it as ghost, right? It ghosts, ghosting. All right, ghosting just means it disappears. All right, because the high is not that high, which appeared to be starting to lock into place, didn't lock into place. So again, I'm using this more as a secondary, you know, it's just a kind of a visual that there's a pivot high there, right? So if you're over here, for instance, right, and you get this bounce up here, well, there's a pivot high definitely in place now because it's locked into place, right? So that could be, a move up, a move down, move up, and then this could be a sell for somebody, right? Using that type of thing. But again, not using it in isolation. You want to kind of look at, you see on this bounce here, there's not a lot of buying pressure there on the bounce, is there? Not like this one, right? So on this bounce, there's not a lot of selling pressure, and we're kind of at this premium in right on the CCI. So you kind of want to put them together a little bit. But when people look at that and people ask me the questions about cycle trend, they're like, "Wow, this is like my answer, manna from heaven. Oh, I just need to use this, and I'm gonna make a gazillion." That's not the case. It's a tool. All these things are tools. You just got to, so how you interpret the tool, take like for instance a drill, right? Anybody use a drill? Anybody use a drill? Well, when you pull a trigger on the drill, do you just immediately, squeeze the trigger all the way to the stop, or do you start the drill slowly sometimes, right? To set the drill, right? Sometimes you do it slowly. Yeah, sometimes you do it slowly, right? Most cases you're going to do it slowly. So that's kind of the idea as well if we're using that type of, analogy. Ease into a lot of this stuff. It's not just, okay, that's the signal, boom, I'm taking it. A lot of this stuff kind of, you do combinations of it, you know. But again, the primary is in your head. What is happening in price? What has just happened in price? What levels can I identify? What's the nature of the price action? Okay. Because all of that is, since it's past tense, if price comes back up here, is it an automatic sell now because it's come back to the premium level? I don't know. It may be. I need to know what's happening at the time. I need to see what's happening in real time if it gets there. But I can say it's stalled, right? So this is where the last buyer bought, LBB. This is where the last buyer bought. I also see that it's, again, value high or premium on the volume. I see that the price was rejected and kind of rotated back down. So there's not a lot of buyers or interested buyers above that level. Now we know that has happened because we can see it and we can now interpret it that way. But that's not where we live, is it? This is all great. You know, I'm a guru being able to describe it this way. It's not where we live. Where do we live? Over here. We all live here. I call this the event horizon. Right? There's the event horizon. Just like a black hole. Right? We all live right here. And all what you have going here is big question marks, right? That's what everybody's dealing with right here. Is it going to go up? Is it going to go down? Is it going to go up? Is it going to go down? Where's it going to go? It's all question marks. And that's what freaks people out a lot of times because they don't know where things, you know, they don't know where it's going to go. Well, it's fine. We don't know. Where has it been? And now we start making some inferences about, well, if the market goes up or if it goes back down, you know, what would I be looking for? Right? If it comes back down below VWAP again, what would I be looking for? Right? Well, there's a pivot here, right? So maybe kind of retests a pivot. Again, it's a scenario. These are the things that you need to do in your head. And so you're preparing for it. Don't know if it'll happen, right? It moves up. What's a scenario that you want to put on the table? Not that it'll do, you know, reach that and fulfill it, but what's your scenario? Okay? So I'm giving you all these different ways of looking at this stuff. Okay? And that's how I'm thinking. I'm looking forward and I'm saying, okay, you know, and of course I am looking at my, you know, tools, right? So price comes down here. I see a star, 200 extreme. Okay, I'm at right around VWAP. So again, is that a trade? Could I buy that there? Right? Is this a buy? Right? Don't we all want to know that if I buy this, it's going to go up? Don't we all want to know that in advance? Yeah, that would be great. But I don't know that. All I know is it went down to an extreme near VWAP. Well, what's VWAP? Well, that's the average price where, you know, buyers typically will respond or sellers will respond. Hopefully what I'm giving everybody here and during a lot of this explanation is tools to use, thinking tools, because that's where it all comes down to, the decisions, right? Whether I want to buy them, sell them. But again, a lot of that has to be based upon, you know, your observation and orientation before you get to the decision action cycle. Otherwise, you know, you are chasing ghosts, right? So if I decide that I want to buy them, oh, I like the 200 extreme idea near key levels. All right, so explore that. Write that down. I like the 200 extreme signals in range or otherwise at key areas. Okay, that's something to explore. See if there's some efficacy. Word of the day, Steve Nine loves that word. Right? See if there's any efficacy to that idea. You'd be surprised what you can uncover. All right. Cool, cool, cool. All right. All right, we're at 2 hour mark here. We're kind of slapping back and forth. Anybody have any further questions you would like to go over? We're just kind of going back and forth here in the middle. So this is still a good time if you want to explore any questions. It is cycle day 2. We do have a normal cycle day 2. Right after that, flurry, opening flurry to the up and all the way down to the down, and now we're basically just chopping back and forth near the middle. So we will still classify this as a normal cycle day 2 rhythm day, even though we got some wide rhythms. But it's like John B said, we're still sitting within that 5-day value zone, and that's kind of what we anticipated in our our opening briefing, right? We discussed that 5-day and kind of what would be an anticipation for a cycle day 2 given that range type of structure. All right, if there are no further questions, I will cut the stream off here today, and we'll get this rendered up and put it on the website, and you'll be able to review this, right, again at a later point. If you didn't catch everything that we talked about, go watch the recording, then take some notes, right? So if you didn't get a chance to, take a snapshot of things that I were posting, that would be a good time. You can also speed up the recording. So if you want to sit here for 2 hours listening to that, you want to speed to a certain section, right? And, advance the recording. I may sound like a chipmunk, but advance the recording. Uh, just in the video section, Barbara. Yeah, let me give you the links. Everything's on the website. Links there. I'll give you guys links over here. Okay. Here's another section of video streams. Okay, you can use. Go back and watch whichever ones you want. All right. All right. Very good. Give me a thumbs up, and we'll reconvene tomorrow, final day of June. And regarding the pit room, PITBULL Traders Room, I have a meeting today about that, and I'm pretty sure that beginning this coming Wednesday, which will be July 1st, I will be simulcasting in the morning here as we're doing in both rooms, right? Myself. So there won't be jibber jab between anybody else in the room. There may be, but it's going to be more, I'm in control of it. And so that way, those that are in the pit room visiting there, we shouldn't have the confusion about one person's talking, Hindu, and the other person's talking Swahili, type of thing, right? So we're all talking the same language. We're all looking at the same things. If questions are being asked over in the pit room, right, they'll be discussed here as well equally, all right, and that'll be on Wednesday mornings. So it's all Greek to me. So that's, I think, the way it's going to work. The final schedule hasn't been approved yet, but I think that's where we're going in terms of that. That way, I can stay focused on just talking, with what we're doing here, identifying our trades, and so forth. And then not only that's just for me on Wednesdays, but in terms of the way the structure of that room is to be worked out, is other guest posts, other guest contributors will be have their own particular days, their slots. Okay, so you can get kind of a cross section, you know. And Manny will have his day as well, clearly, So if you like Manny's, work and everything, but all this is still being worked out, kind of getting some of the rough edges off on all of that. But hopefully that's it'll get ironed out smoothly enough for everybody. So that's kind of what we're looking to do, whether or not it happens this week or after the holiday. But we are making changes there, so it all works out smoothly. All right, so for today, we're going to cut the stream off here and have a good rest of your day. And then we'll reconvene tomorrow morning, same bat time.